Hey, gang. Welcome to another episode of Try Not to Curse. Elizabeth Marvel here with you. This week, one of my friends from college actually reached out and was like, listen, I listened to the pod. One of our mutual friends, Kelly, might be interested in coming on. You should reach out to her, see if she'll talk to you about what she's up to lately. And I was like, cool. You guys know I love recommendations, so keep them coming. Kelly, welcome. We have not seen each other since college, since the University of Hartford days.
Correct, which is a long time ago at this point.
You and I were in art history classes together. And I think, did you major in art history? That was, at least that was the direction you were going in at the time.
I actually majored in printmaking in fine art.
Oh, okay.
So I had a minor in art history, but I went like full throttle and got myself a good old 4-year degree in art.
Okay. So did I. Excellent. So then you took classes with Maria, probably, who's been on the pod.
Yes.
Yeah. Excellent. But now is it mortgage broker? Is that the title?
A good question. I'm a mortgage banker. Which is similar to mortgage broker, but I'm a mortgage banker.
Okay. We'll get into what the differences are there. But take me back to University of Hartford days, printmaking, art history. What did we do when we graduated?
A long, convoluted path here. So I got a degree in art, and while I was at the University of Hartford, and I'm a University of Hartford stan, love the University of Hartford, had an amazing time there. I knew pretty early on in my time as an art major that I was not going to be a professional artist. Not because I didn't love it. I did love it, but I'm more of a process person than a product person. And that is a great sort of segue into what I do now. So I'm a process person. I love the process of making art, but I don't say I didn't care what happened at the end of it, but it wasn't necessarily always about the final act, right? Like the piece that you made. And I also honestly wasn't really that great. So we have to look back at ourselves and say, I was never going to be a famous artist.
You are describing exactly my experience as well. And I've talked with Fiona about this because I said to her, I said, I've never been, same thing. I love the creative process. I love thinking about something and then seeing it come to fruition or it completely flops and you know, what you learn from it. But I said, unlike Fiona, I said, I never woke up every single day with the desire to create or to build or to work on something. Whereas she can't help herself. Like she's constantly drawing and thinking up different things and colors and shopping for supplies. And I just said, that's not where my brain ever went. So same thing. I knew right away I was never going to be a successful artist, but I also knew I didn't want to be an art teacher or anything like that as well. I did want to work at a museum, but since we don't live in a major metropolitan area, that also never happened. Right. Thank you. See, you totally get it. I appreciate that. Thank you so much.
And I knew that, especially going into my senior year with the senior show, I was like, I like this, but this is not what I want to do. Now, what I did find at the University of Hartford was I was very involved. So I was on student government. I was Greek life. I did a lot of stuff, which was very different from high school Kelly. High school Kelly did nothing. The University of Hartford really gave me an outlet where I felt very comfortable, and I learned that I like to speak to people. And so I said, okay, I'm going to go into higher ed. I'm going to go into be a professional college student. I'm going to do the college thing. So upon graduation, I actually worked. I was a nanny for a little bit because, I had an art degree. So you gotta make that money somewhere. So I was a nanny, and then I ended up going into higher ed, and I actually worked at Post University in Waterbury in their online admissions program. I worked at UConn Waterbury for a brief period of time. But I sort of found that I'm a good talker, and admissions really worked for me.
There you go.
So I went whole heart into college admissions. So I actually ended up getting employed by the University of Hartford. And I became their sort of recruiter. I was called the manager of student services for the College of Engineering, Technology, and Architecture there.
Okay.
And I worked at the University of Hartford for almost 10 years. It was very fun in that so College of Engineering, Technology, and Architecture is called CETA. Obviously, very different brained type of people. I went to art school, very creative. I was working with engineers, very linear thinkers, but it was a great sort of place for me in that I was able to bring a lot of thoughts and ideas for them about different ways to do things. I went on to become their director of student services. So I worked with incoming students, so juniors and seniors in high school who were exploring going to school for engineering, technology, or architecture. And then I actually was the retention officer. So I kept them through their freshman year. So I did their academic advising, helped them pick out classes. I did all their student success courses. So I taught 4 courses a year. And I was really entrenched in like the college freshman experience, which I adored. It was a great job. I was back at a place that I loved. And I frankly thought that I was going to do that forever.
That's
was
fantastic.
It was great. Rewind now 10 years from now, my husband, who was my fiance then, my husband already owned a house. So he had already done the mortgage thing. We were going to buy a house together and sell his house. And I started the mortgage process with Bob Zanlungo, who is actually on the other side of this wall right now, my loan officer. And he was sort of the person who got us through the home buying experience. And I think by nature, and this might be the art student in us, is I am an explorer. And I can never just know the tip of the iceberg about something. I have to full rabbit hole into anything that I am doing, and I must know everything. So I asked this poor man 1,000 questions about mortgages, about real estate. Why is this like this? Where do interest rates come from? What is mortgage insurance? Why don't I have it? Why do I have it? I asked him a million questions, and I found a couple of different things. Number one, we are not educated about the home buying process in the United States at all.
Not at all. Not at all. And I feel like it's so nuanced, and it's constantly fluctuating and changing. So I've had so now I'm on my 3rd house. When I was going through all of that, I had 2 different realtors, and both of them had said to me, you would be amazing at this. You would be so good at this. But for me, I'm really, really hung up on I suck at math. I'm really bad at numbers. So I'm like, there's just right. But I, it's like, I'm like, there's laws and there's regulations and there's codes and then depending on this tax bracket or your down payment, it varies and again, tax code and bank policy and all this other crap. I feel like it's so overwhelming that I'm like, I don't know if at 40, I want to just ditch my current job that I've been at for 12 years and get into something. So, and especially because I've also been told, and this is totally aside because you're not a realtor, but I've also been told within your first year, you make no money at all. You have to constantly be hustling. Yeah, you have to constantly be hustling. You have to be available pretty much 24/7 because some people, everybody's schedule is different, and even the sellers, maybe they're home all the time, and you have to get them out, and it's just a lot to think about, and to me it's very overwhelming. But I would love, same thing. I'm a talker, as you can tell. I was. What's the word I'm looking for? A tour guide at UHeart for the last 3 years that I was there. I loved it. So it's just so funny, how similar we are with that. But yeah, it's just, it's so, there's so much to it. And when you're in it, it's overwhelming. So the idea of it being a job every day and being surrounded by it, I'm like, I don't know. But like you, I would have to be an expert. I would have to
That's
really,
me.
yeah.
I have to and even when I worked in the College of Engineering, most of the parents and students that came to me thought I was an engineer because I just I'm a memorizer, number one. I can memorize anything.
Yeah.
But I like to entrench myself in whatever I'm doing. That's really how I am. And so while I went through this process, I had a lot of light bulb moments of, number one, so part of my sort of business is I work primarily with women. I have lots of clients, but my main focus is female homeownership because I think historically women are not as encouraged to buy homes, especially when we're single. I think it's a lot of like, oh, wait till you're with someone. Okay, well, that's like a big mistake. Not necessarily great for everybody. And I just also think that we're not often, because the generation before us, the home buying process was always led by men. So that's who holds the knowledge. That's who holds the how to buy real estate, how to do it smartly, how to get a mortgage knowledge, is often men. And so they were passing that information down, but often to their sons, not always to their daughters. And so I kind of left the home buying process feeling very empowered. So my loan officer was amazing, and he answered all of my questions. My husband was also great about it. But I left going, okay, I rented because I bought my house at 30. I rented for 10 years. Very expensive apartments because we live in Connecticut. Like, nothing's cheap here.
Well, I also think with that, historically, we've also been, we're more encouraged to rent or to lease than to own for I don't know. I think a lot of people sell it as like, oh, well, you've got that flexibility. You can get out anytime and you're not beholden, and, you don't have to go through all of that over and over again. But at the same time, like, at least from what I've been hearing and the things that I have been seeing myself, like, it's almost harder to rent nowadays because now you need all of these the background checks and the references and the security deposit, and the rent's just going to go up. It's not like you're locked into this rate like you would be with a mortgage or anything like that. So I think that's where a lot of it came from as well, especially with women, is you're encouraged to rent because, oh, you don't want to be tied down. You don't know what the future is. What if you want to just pack up and get a different career or move out of state, or you move, like you said, if you get married, you move to where your husband's at or what have you. But me personally, like, I was actually just speaking with my realtor because I've been at my place for 3 years now. And I was thinking about another place here in town that's newer. And I said, oh, can you give me some information on this? And she's like, it's all rental. She's like, do you want to rent? I was like, absolutely not. Never mind. I'm good where I am.
You're like, no, that's not. Yeah. Well, and I think that's it. And so once I closed on my house with my husband, I started convincing my friends to buy houses. Like, hey, your rent is $3,000 a month. You could actually own the same property for $1,500 a month.
Right.
And kind of started to try to convince everybody to do this, because once I saw the process, I was like, we all think this is way scarier than it really is. So that lasted for about a year of me convincing all my friends to buy houses. And then Bob, my loan officer, actually became my friend. He became friends with my husband and I. He was from town. We knew him. Him and my husband were in the Glastonbury Rotary together. So it wasn't like some stranger, but we became friends with him. And he was like, why don't you do this? Like, you live in town. I'm a townie in the town that I'm from. You know everybody. You love to talk to people. And you currently do college admissions, right? Which I always tell people, because people are like, what's the correlation between mortgages and college admissions? When I was doing college admissions, you are helping young adults make the single largest financial decision of their lives thus far, right? I'm doing the exact same thing for the next phase of your life, right? I'm helping you make the largest financial decision at this point of your life. And it feels very similar. The process that people go through when they're shopping for colleges is very similar to what happens in the housing process. And he's like, you should just get your license. Just get your mortgage license on the side. So that's what I did. I got my mortgage license, and I was still working at the university, and I thought that I was going to do both things together. But very quickly, upon me getting licensed, I realized that my sort of mortgage business was picking up very quickly. And while I love university life, for anybody who works in higher ed or has thought of working in higher ed is a lot of hours for not a lot of money. That's it. You work crazy hours, you work nights, you work weekends. I did open houses, I did orientation, and I did not make a lot of dough. And that's just sort of the life of nonprofit universities. And so I ended up quitting my university job, which was very sad because I loved it, and going full boat into lending. And that was like, I don't know, 2013, maybe, something like that.
Well, but walk me through the process. What is it? What do you have to do in order to get licensed? How long does it take? Do you let's be honest, how much does it cost? I mean, is it, like I've heard that as far as getting into real estate, it costs like $10,000 for the schooling, for, to get your certification and your license and all of that. Is it similar for a mortgage banker, or, no, she's shaking her head no.
No. So here's the thing to know is, number one, there are 3 different types of mortgage loan officers in the United States. Okay. So I am a mortgage banker. I work for Total Mortgage, which is a nationally, we lend nationally. We essentially lend our own funds, but we only do real estate. So we only do mortgages. So we're a bank, but you can't have a checking account with us. Okay. So I'm a mortgage banker. My type of lender has to be licensed. Not all loan officers have to be licensed. So I have to be licensed. I am state licensed, which means every state I want to lend in, I have to hold a license for. In order to do that, you take a 20-hour course, okay, which is done online. It's, I don't know, maybe $500 or $600. It's hard, okay? Something crazy, like 80% of people fail these courses and the test the first time that they do it. Once you complete your 20-hour course, you will take state courses. Those state courses can anywhere be between like 1 hour and 3 hours per state. You take your state courses, and then you will take a large national test at one of those like scary national testing centers where they like strip search you and you have to like hand them your phone and everything. And then you like sit in front of a computer and you have X amount of time to take a test. So everybody fails that test. Very scary. And again, having been an art student, testing is not my thing. So I was very intimidated. I did pass on my first try, but it was very, and so you do that, and now you're licensed. Once you're licensed, a company can sponsor you, and you can only work for one lender at a time. Okay. So you get licensed, and then you work for the bank. The other two types of loan officers there are bank loan officers. So if you walk into any bank, your Chase Bank, your TD Bank, there's a loan officer sitting there. They are not licensed. Okay. They don't actually have to do anything to be lenders. Their license is held by the bank or the depository that they work for. They are often tellers or front office managers or the manager of the bank who also does loans kind of on the side. They often do multiple types of loans. They will do car loans, personal loans, home equity lines of credit, residential mortgage loans. So it's just a little different. I will tell you, they tend to be less specialized because it's not necessarily their full-time job and what they're doing all day. And then there are also mortgage brokers. And the term mortgage broker is used very interchangeably for all of these. But truthfully, a broker is a third party. So they own their own company, usually, and they are going to go out to banks and mortgage banks like mine and say, hey, I've got a loan. Do you want it? So they're kind of like a third party. I will be honest with you, all the different types like to poop on each other, like and anything you're kind. We all have our strengths and our weaknesses. I prefer the type of lending that I do because I have a direct relationship with my bank, which is my company. And so I can go have conversations with underwriters, with processors, with the president, with those people because I work directly for them. Yeah. So I think it's a little smoother and cleaner. But there might be products that I don't have that a broker has. Banks may have lower interest rates because they're lending their own money. So they kind of have some different rules, but you may end up with a loan officer who's much less experienced, who maybe says, yeah, you can get this loan. And then it gets to underwriting and they say, hey, actually, you can't get this loan. And here's all the reasons why. So I picked the type of lender that I was very specifically when I got licensed. So yeah, it's kind of it's interesting. It is. I actually think there should be more education personally in becoming licensed. We do 8 hours of continuing education a year that is recorded, plus hours for our states. And like I'm licensed in Connecticut, Massachusetts, Florida, Rhode Island, and Vermont now, I think is where I'm licensed. Oh, that's awesome. So like I have to do continuing hours for each state, and it's all like state specific. So like Massachusetts hours look different than Rhode Island's hours. But I think it's really helpful because I'm like the more training, the better, because it's a very complicated industry.
Absolutely. Well, and one of our friends from the University of Hartford is a realtor down in Florida. She's big on TikTok, all of her stuff. Like she's selling some crazy houses down in Florida. But I had a mortgage broker, I've used the same guy for all 3 homes that I've lived in. He's amazing. But I know what you're talking about because he would do that. He would, punch in my numbers, punch in, what was going on. And he would say, okay, I found this rate from this company or that company. And so that was always very interesting to me. I was like, again, not really being familiar with the process. He absolutely knew his stuff and, kind of helped me navigate and figure out what was going to be best for me and for my needs. But again, it's one of those where you sit back and you're like, how can you possibly keep all of this straight? It's like, oh my gosh. So for you to be licensed in so many different states, I think that's absolutely incredible. And clearly it's a passion of yours. And is the process the same for every state essentially? Or
No,
okay.
that's what's kind of wild is that every state is very unique in how they do, how they complete real estate transactions. So, for example, here in Connecticut, we're what's called an attorney close state, meaning that you close with an attorney. So there is an attorney at the end of the transaction. They're like the final boss of the video game that you have to get through before you get your house, and they sort of vet all the paperwork. You sign your documents with them. In other states, those are called title close states, where you don't have an attorney at all. You close with a title company, a title recording company.
Okay.
So those can look very different. The contracts that we write can look very different, even in the same state. So again, in Connecticut, I lend all over Connecticut. I'm in Harford County though, so the vast majority of my business is sort of in this area. Fairfield looks completely different. So their transactions use a different contract system where they do these offers to purchase first and then sign a real estate contract, usually after inspections. And they do it that way because that's how New York City does it.
Okay.
So they're mirroring what's happening in the city. So it is a lot to kind of keep together in that all these different places look very different. But once you're doing it, you kind of figure out all the little nuanced pieces. But it is a lot of moving parts, especially as you're moving across states.
And so... I see nothing is taboo on this show. I like to keep it really real. How do you get paid?
It's a great question.
Throughout this
and
process?
Actually, it's one of the weirdest parts of the mortgage industry. So I am 100% commission. Okay. So I make commission on every loan that closes. Now, a few things that means? That I do not get paid on every transaction that I work on. Okay?
Oh, wow.
Because lots of transactions you work on and they never close. So if it never closes, you get no money on it. We are essentially paid, I explain it as a finder's fee. So the bank that will eventually hold this loan, and a lot of times that's actually a government entity, Fannie Mae, Freddie Mac, Ginnie Mae, which holds government loans. They essentially pay us a finder's fee off the back end of the loan, and they're paying us off of theoretical interest that they're going to collect over time.
Okay.
Okay, that's what they're paying us from. And they pay us a percentage of the loan amount, not your sale price like a realtor gets. We get paid a percentage of the loan amount. That percentage varies. It's not the same all the time. Every lender doesn't get paid the same. Some of it you negotiate directly with your company, but there are also different products that sometimes pay different amounts. What we are not paid on, which is a big sort of myth in real estate, because it used to be true pre the 2008 crisis, we do not get paid according to your interest rate. Okay. And that used to actually be how loans happened is if we jacked your interest rate up, we got paid more. It doesn't work that way anymore. And we don't generally get paid by product. So I'm not going to make more money by you being an FHA loan or a conventional loan. It's really by who's going to be kind of purchasing these in the end. But that's not actually how everybody gets paid. Okay. That's usually how retail lenders get paid. A bank loan officer, again, who's working for a bank, a regular bank, they're actually usually a salaried employee that may make a small bonus, $25 for closing on your transaction. But they're going to make their salary no matter what. And then brokers, again, they will often negotiate what they get paid with each individual place that they're going to be sending the loan. So it's a little bit unique in that we sort of have three people doing jobs that have the same end result, but we're all getting there in very different ways.
Yeah, absolutely. Well, and like you said, like the bank officer, it's just another day at the office for them. They really don't have the motivation, I should say, I guess is the best term, to work, to really do the best they can for you. It's just more kind of like, oh yeah, here's another loan. Okay. Yeah, we've got this available. Whereas like you said, with what you're doing, you want to make sure you're doing the right thing by the client because you do want them to close. You do want them to get the loan. And you also want them to come back. I mean, it's one of the, like I said, my mortgage broker I've used for all three of the homes that I've lived in. I love him. He's incredible. It also helps that
you have a relationship.
Yeah,
with him,
he's also very attractive. Let's be honest. But when you have a good experience with someone and they treat you like a human being and not just another number that just comes across their desk, it does make a difference, especially in a situation like that when again, home buying, it's so overwhelming. I shouldn't say you should. It's an emotionally draining thing, but you're talking about money and you're talking about where you're going to live and you're talking about the next couple of, maybe a decade, maybe the rest of your life where you're gonna, lay up, and you want to make sure you're doing the right things, and you also don't want to put yourself in a situation where, oh crap, like, now I have to work an extra job or two because what did I do to here? So I definitely think that what you're doing, and like I said, what he does with the mortgage brokerage, it's so much better than going, especially, I mean, these days you can't trust a big bank anymore either, unfortunately.
Especially not recently.
Oh my gosh.
And it's the sort of thing too, I think, where I always tell my clients, like, right, I'm an educator first. That's what I came out of. I worked in higher ed for a million years. So my goal for everybody, and I think it's part of how I ended up here in real estate, is that I don't ever want anyone to feel dumb. I don't ever want anyone to feel like they have unanswered questions. And I don't ever want anyone to end up at the closing table kind of without, like, how did I get here? Like, what am I signing? What does this stuff even mean? Because I feel like we spend, especially as women, a lot of time earlier on. Like, how many of us signed up for student loans when we were 18 that we did not know what we were getting ourselves into? That's sort of the history of women's finances, is that we sign a lot of dotted lines that we don't understand what's behind them. So I always tell my clients that my goal is not only for them to buy a house, but to get to the closing table feeling educated and feeling knowledgeable and feeling like they can teach their friends, their children, their coworkers about this process, so everyone can more freely access housing. Because I think what ends up happening is it ends up a little bit like of an elitist thing where some people can access housing because they understand how it works. But some people who could buy houses never end up doing it because they honestly just don't understand how it happens and how it works, and they're too afraid to ask people. So that's like part of my big mission, is to really make housing accessible for women, and to make the process accessible so that way they can, with confidence, make these decisions for themselves. And hey, sometimes I have clients that come in that I'm like, you know what, you actually should rent. Here's the reasons why. Like, this is not a good move for you.
Yeah.
I will often talk people out of it if they go, well, I really want to buy. Well, why? Right? We have to get into the why. What's your big why? Why do you want to buy? Doesn't make sense. If somebody says, well, I'm in this job, but probably in the next 5 years, they're going to transfer me to California. Okay, that might be fine, but we got to do the math. We got to crunch all the numbers to make sure that this makes sense for you. But I think that that's like my big driving force is I have 2 daughters and a son. Love my son, he's great. But I want my 2 daughters to feel very empowered to purchase a home without anybody else, on their own, if that's what they want to do and if that's what makes sense for them.
Yeah. So I say this a lot, there are so many options out there. And I don't necessarily know that that's always a good thing. I think in this kind of situation, having a ton of options is great, especially if, because income tax brackets, they're all over the place. So me, myself, especially when it was my first time, I was completely alone buying my house. I liked having the options. I'm one of those, like, again, because I'm terrible with numbers. I'm really terrible with money. I'm always like a monthly basis person, rather, like, if you're telling me like, oh, you're paying this annually, I don't know what that means. Like, I need you to break it down in a way that makes more sense to, like, I get paid bi-weekly. So how much do I have to take out of each check? You know what I mean? So in that regard, I do like the fact that we have so many options, but I also think that those options make it an overwhelming situation because you've got what's the right choice, and then again you hear things about the housing market crashing and all of these different loan companies and doing shady shit and screwing people over and interest rates and all this stuff. So it's kind of like a gamble. It is, but also like I said, that's why I'm kind of 2 minds about it. In your opinion, are there too many lenders out there now, or is it just, does that just make it easier for people of all different walks of life and incomes?
That's a great question. And I think we actually have to rewind this conversation to 2008 to really answer it.
Yeah.
So in 2008 was the housing crisis, and we, as lucky millennials, lived through that. That was happening upon our exit from college, right? Is we were getting jobs, and then there was a massive worldwide recession, and the housing market crashed. And when that crash happened, pre-2008, it was very easy to get a mortgage. You could fog the mirror, like, you're alive, cool. Here's your $500,000 house. Hop on in. And that was part of why there were so many foreclosures, is there was people who were really not qualified to buy houses. Post 2008, the real estate market and mortgage market really contracted. It got very small. A lot of lenders got out of the game because they lost a lot of business with all of the houses that foreclosed. And we have been on a very slow march up in order to sort of right that ship. Now, after 2008 is when mortgage licensing became a thing. Pre-2008, anyone could be a lender. Mortgage licensing became a thing. We became heavily regulated. We were not a well-regulated industry pre-2008. We became heavily regulated. All the stuff that we do as lenders is well tracked. The guidelines that we have to see that people are qualified for mortgages are currently at an all-time high. So it is harder to get a mortgage now than any other time in history. Why is that important? When I say harder, that scares people. Like, oh, it's really hard. I'm not going to be able to do it.
Right. Yeah.
It's not really how it goes. The hardness factor is really, we are really looking to make sure that your income that you have coming in versus your obligated liabilities. So your credit cards, your car loans, your student loans coming out, that the delta between those two is enough to support housing. And a lot of people will say to us, well, I rent for $2,000. Why can't I have a mortgage for $2,000? Because you can always get out of your rental and they can rent that to somebody else.
Yeah.
A mortgage is different because in order for you to get out of your mortgage, you either need to sell it or the bank needs to sell it for you because you haven't done it yet. So it's a lot bigger of a thing. They also generally need to evict you, amongst other things, and the bank doesn't want to do that.
Right.
So we really become heavily regulated. And I think the trick is there is a lot of options out there, but the options that are out there are really designed to make housing as affordable and accessible as possible to people who are in a financial position to pay that mortgage. So it's not everybody, but I will tell you there are programs available for people to make housing as accessible as possible. Now, the last 2 years have been kind of unique in that as interest rates have risen.
Oh, it's wild.
It's become much less accessible, but the government is really trying. Like here in Connecticut, we have CHFA, or the Connecticut Housing and Finance Authority. They have some awesome programs available to help make housing accessible. But all of those options are really confusing for people. And I think what happens, and I think I always like to pick on myself, right? I'm an elder millennial. I'm 41. We're sort of at like the cusp of the millennial generation. Yep. Is that we struggle in that we're all Googlers. Okay, we came up in the time of Google and we want to Google everything. Like Google how the best way to get a house, Google a mortgage program. And I think that does two things for us. And I am the queen Googler. I told you I'm a rabbit holer. Everything that I have to know everything about. And I Google the baloney out of everything. Is number one, we can occasionally arm ourselves with bad information. And it can be really hard to let that information go once you kind of know it's out there. So that's sort of one of the hard things with how many programs there are is you can like see a program and be like, that's the program I want. And then once you get to a lender, they're like, oh, okay, there's things that you don't know about that program. It can be hard to kind of give up the dream of that program. But that's really where a trusted lender comes into play. Is that part of my job, and honestly, the main function of what I do is I'm a marriage matchmaker. Okay, my job is to marry you to the loan product that makes the most sense for you. And you mentioned sort of you're a monthly person.
Yeah.
Okay, I believe almost everyone should be. We live our lives and because here in 2024, nobody's balancing checkbooks. Okay, we're not looking at a total balance.
Yeah.
That's not what we do. We live in truthfully, and I say paycheck to paycheck, and people think like, oh, you don't want to live paycheck to paycheck. It's not that we live paycheck to paycheck. It's that we balance our financial lives by the way that we get paid and the frequency and the amount in that pay.
Exactly. Yeah.
Are you paid once a month? Are you paid twice a month? Are you bi-weekly? Are you bi-monthly? There's a lot of different ways, and how much money is coming in and what do you have left at the end of the day? And that is what I tell all of my clients, especially first-time homebuyers, from the first conversation is, here's the thing. You can go online and you can plug information in at rocket.com and they can spit out, you can qualify for a $550,000 house and you say, cool, and then you go out shopping. But if you don't quantify what does $550,000 mean to you, what is that as a monthly payment? How does that fit into the rest of your budget? How much cash to close do you need to get into that? Do you have that much money? Is there a program to help you if you don't have that much money? You really have to quantify that for them because it doesn't matter what the house costs. if you can't afford the monthly payment.
Well, and again, like you said, the payment structure is so varied. And I mean, I have friends like yourself that it's 100% commission. So if you have a slow month compared to, the last month or whatever, you don't know 100% what your bank account is going to look like at the end of that month. It's great to have a mountain of savings, but the moment one major thing happens, that is all gone. So, for me, I'm a planner. I'm one of those people. I make a list for every damn thing that I do. And I always tell people, number one for me, again, because I am bad with money and I am bad with numbers, the number one priority for me is my bills are paid first before anything else. Yeah. So maybe I don't have groceries one week, or maybe I don't get to do that fun thing with my friends the other week, but my the mortgage will always be paid. My electric will always be on, my internet will always be working, all of those kinds of things. And I would hope that thinking kind of forces people to prioritize in that way. But again, like you said, when you're talking, big lump sum annual amounts, you kind of get hung up in the numbers. Yeah.
Yeah, it becomes really nebulous at that point. And the other thing too is that what the government says you can borrow, the numbers that they're really looking at is they care about obligated debt, because credit is always tied to other credit, right? Okay. One creditor wants to make sure that you're not screwing another creditor. So they only care about your obligated debt. Again, car loans, personal loans, student loans, credit cards, loans.
But I've also seen the opposite, whereas especially at a time for me, right out of college, I had a credit card that was totally maxed out, and it seemed like everybody wanted a piece of me. It was like, I have a huge balance over here on my Discover card. Now American Express is calling me, and Visa is calling me, and MasterCard is, and it's like, wait a minute, but you know what I mean? So it's
because they know you're willing to use credit and they can make interest off of you. That's 100% why. You are a moneymaker.
Yeah,
people who don't carry credit are not moneymakers.
Yeah. Okay.
But what we don't care about as lenders, and I do care about, and I talk to my clients about, is that what do the rest of your bills look like? What's your car insurance bill? What is your cable bill? What is your internet bill? What's your cell phone bill? Do you like to go on a big vacation every year? What does the rest of your life look like? Because I have clients where everybody's priorities, and again, I think especially the millennial life that we live, is people live very differently from each other, right? And I had a client who, he was a massive sports fan, okay? And he paid for every single cable channel that you could pay for sports. This man's cable bill was $900 a month.
Oh my God.
Oh my God. But this was a priority for him. He had his friends over to watch games. He threw parties. This was a major core of his life, and his joy was this cable package. So we had to budget this cable package into his life, right? It's like, this was more important to him than just about anything else. And the mortgage company, we don't care which cable package is, because in our opinion, you can cancel it. But I don't want people canceling the things that bring them joy. Right. I've people that say, you know what, I go on a 7-day vacation every year. My budget for that is $10,000. This is incredibly important to me. I want to make sure that I can do it. And so I really work backwards with everybody. Is like, what are your goals? What are you trying to accomplish? What do we have left? Okay. And then what sale price of the house meets that monthly payment, meets whatever that goal is. Because if you work the other way, and I think this is what happened to a lot of people in 2008, is they said, oh, I can qualify for $550. Cool, I buy the $550 house, and now I have a mortgage payment that, can I qualify for it? Yes. Can I support it? Okay. Right. Can I actually support it? Can I live in it comfortably? The answer might be no. Yeah. The other piece that's interesting to that is also, and you're interesting in telling me you've lived in 3 houses, because that is actually not common anymore. Well,
so I will say the first 2 that I lived in, I co-owned with friends. We bought in together. It was a conversation where I kept seeing that rents are just going up. Rents are out of control. Rents are bananagrams. And it's not like it's just the rent, because then it's rent, but your electric's not included, or your water's not included, or your internet, what have you. So I knew the number was only going to get higher no matter where I looked in that regard. So I had got together with friends and I said, listen, I'd like to own. I'm not in a position to own by myself just yet. My credit's not great. I still have student loans, car payments, that kind of thing. but I also know that I'm better off buying than renting. Why don't we get in on this together and, you know, look at it as an investment? Don't know what the time frame is like. And thankfully I had friends that were like, yeah, that makes sense for us. And financially that is our better option. Cause still, and even to this day now, it's just me in my little 1,000 square foot, you know, townhouse apartment condo. My mortgage is still, it's under $1,000, even with my HOA fees.
Which is amazing.
Which is amazing. It's unheard of. But again, people don't look that far into it, and people don't, you know what I mean? Like, so it's so easy to get overwhelmed and to get hung up on the numbers. And then again, all you're hearing nowadays is like, oh, the housing market sucks and everything's so expensive and you can't afford anything and people are price gouging. And I had kept hearing from friends that were renting every single year, oh, the rent's going up, the HOA fees are going up. And I said, okay, I don't want to be in that situation where next year I don't know if I can afford to live here anymore. So that was my whole reason for doing that. And thankfully it's worked out well for me so far. But let's talk about that too. And again, I understand you're not a realtor, but oh my God, what is going on? So when I bought my townhouse 3 years ago, again, 1,000 square foot, 2 floors, no garage. I get 2 parking spaces. I do have a washer and dryer in the unit, 2 bedroom, 1.5 bath, 1,000 square feet. I said, I got it for $150,000. Just recently, one of the units in my complex sold for $225,000. Exact same size. In 3 years, the price went up almost $100,000. What the fuck? Holy shit. What is going on? I mean, great for me, you know.
But you feel for the people who haven't bought yet, right?
My poor mother, and my stepfather have been going through this because, well, I will also say my stepfather is also extremely picky. Like, he does not want neighbors. He doesn't want to see a person. Like, he wants to be in the middle of the fucking woods, but he also refuses to move out of this town. So, you know, your options obviously are going to be very limited there, but the prices are just bananas. And, you know, you try to stick to a budget. You say, okay, I'm looking around, say $250. Well, they're all fixer-uppers. They're all pieces of shit. You want anything that's prefab or move-in ready or
500?
What is going on? Do we see an end to this in sight? Is it because I mean, just like in my opinion, just like taxes, they're only just going to continue to go up, I think. So what do people do in that regard? And I think that's also the reason why people choose to rent, because they see those numbers and they think there's no way I can afford that. But again, if you sat down and you crunched the numbers and you broke it down on a monthly payment basis or an annual, you know, every 6 months or what have you, I think the conversation would be different. But people are so intimidated by that sticker price that and we don't really have a ton of inventory right now as well. So I just don't know what's the answer. What do we do? Where do we go from here?
So you said the most important word there, and that was inventory. So all of this is tied to inventory. So we're going to rewind again to 2008. Okay. We have a big housing crash. And when that housing crash happened, builders stopped building new houses. Okay. Because we had houses sitting on the market. So why would you build a new house when there was empty houses galore? Here in Connecticut especially, we had a much slower rebound from the 2008 housing crisis, partially because we were a more expensive state to live in anyway.
Sure.
So it took a little bit longer for things to pick up. Once things did pick up, land in Connecticut is also expensive.
Yes.
So a lot of developers and builders looked at this land and said, well, if I'm going to build on the land, I'm going to build the most expensive house that I can so I can make the most money possible. So people stopped building starter homes. Okay. Starter homes don't exist anymore. When was the last time you saw, other than condos being built, there are some condos being built now, but a development of $200,000 houses or $250,000 houses? No, you see developments of $700,000, $800,000, $900,000 houses. So that's sort of our first piece of the puzzle of where sort of things have gone awry in the housing market. The other thing is we like to call it the silver tsunami. It's a nice, kitschy word here in real estate, is people are living longer than ever, number one. And it is now very common for people to age in place. So where 20 or 30 years ago, as people became older, they often went into retirement homes, which are not the same as convalescent homes, but like senior living situations.
Yeah.
They may be to 55 and older communities. They may have moved down south. They may have done a lot of things. Well, those have become harder and harder to come by. So it is often cheaper for seniors to stay in their house that might be paid off or have a very low mortgage payment. And what that's doing is it's making it so people who need starter homes cannot get into them because there's already a generation sitting in starter homes, which are really the older millennials, and Gen X are kind of the ones chilling in starter homes.
Yeah.
Those millennials and Gen X want to move to the next house, right? We want to move to the 4-bedroom, 3-bath colonial, but our parents are still sitting in those homes. They have not left them.
Yeah.
And they want to die in them. So where do we go? We just have gridlock.
Yeah.
We have gridlock. There's just nowhere for anybody to go. And because of that, it's driving the price of homes up because one house comes on the market and 45 people make offers and they buy it for $100,000 over asking.
And again, it doesn't seem like there's any end in sight. So, I mean, no. So I have to ask too, why are we creating these 55 and up communities? Can we not create, fresh out of college, 25 to 35 communities and lock in the rate there? I mean, it just seems like we're kind of gatekeeping, but in the wrong direction and for the wrong reasons. I mean, again, I can understand the need for a 55 plus community because most people at that point, they're on a fixed income, they're living on their Social Security, what have you. But again, seeing the financial situation, the financial crisis, the state that we're in these days, it's not like salaries are increasing. Your starting wage is not getting better. The cost of living is out of control and corporations are just not matching that for their people. So is it feasible to think that maybe one day somebody could come up with something like that? This, 25 to 35 community. I mean, I just like, again, like you said, they're building condos like crazy. God, everywhere you turn, there's this new development, but there's still $200,000, $300,000. I mean, it's or alternatively rental, $2,500, $3,000, $30,000. I mean, and then you've got your HOA fees, then you've got your internet, then you've got your cable. Like even if you don't have anything, if you want to just buy a space to sleep and live in the dark, you can't afford that either. I can't even afford to live in a box.
No, well, and that's, I think, the thing. You're actually, and again, I love hearing your story because you're doing what we're actually encouraging a lot of people to do these days. And that is purchase with friends. It's a great solution, right? Especially when you're in your 20s, get 3 or 4 people together, go in. You need to have some legal contracts drawn up, right? That's the safest way to do it. So that way everybody's comfortable and they know who put what money in. But that multi-generational housing, we're seeing a big increase in. So people, we got out of living with our parents and living with our grandparents, but we're seeing a lot more of that again. But it is really hard. It's hard. And the other thing too is currently in Connecticut, the cost to rent per square foot is higher than the cost to own.
100%.
So education is also the other huge piece to it. Is, as you said, like people don't always realize, even with interest rates where they are, that, where I live, in the town that I live in, the average rent for a 2-bedroom apartment is $3,000 a month. I can honestly get you a pretty nice house for $3,000 a month.
Oh, absolutely. Yeah.
So it's the sort of situation where, people are able to get into housing, to really get comfortable, and not even know that is a choice for them if they never try it.
Well, and also I've heard a lot of people they're staying in their family home, they're staying with their parents, but they're buying the home from the parents, but the parents are still living there, or and contributing in some kind of way. So just like you said, when you buy with friends, same thing. You stay in with your family, you never move out of the house. But you're taking on the financial responsibility, building up your credit and, building up your investments in that regard. Now also, and I don't know how much you can speak to this, but there's articles all the time, there's like the, just different money blog or advice column kind of things that I read all the time. And I'm learning a lot because, I have relatives that are in their 80s and their 70s and 80s. And I always think about like, what's going to happen with the house? What's going to happen with the car? And a lot of people don't realize, and I've seen this firsthand with a couple of my coworkers, that the property value kind of dictates when you sell your home. So just to in layman's terms. So I had a coworker who was trying to sell his home to his niece, and they were trying to sell it to an affordable rate. They've already paid it all off. They're not looking to make money off of her or anything. It just try to get her into a nice situation and make sure the house, doesn't fall, to people who aren't going to tend to it, whatever. Well, the bank told them, no, this is your property value. You can't sell this home for $250 when the property value is at $350. So I think a lot of people don't realize that because they think, oh, well, it's my home, so I can set the price. I can decide how much I want, much or little I want to sell it for. And that's not always the case. So there are a lot of people, I had this conversation with my cousin actually, because my uncle is 82 years old. And I had said to him, your sister's in New Jersey, you're out in France. What's going to happen to this house? Because as of right now, I don't think I could afford it. And again, you guys you'll try to sell it to me to a price that I could manage, but the bank just won't let you. You know what I mean? So, yeah.
Here's the trick there though. That's a bad loan officer. And
okay. Okay.
They structured the loan incorrectly. So you're not wrong.
Okay.
You can't. Hold on. I'm just going to plug my computer really quick because apparently it's 2024 and batteries last for 3 minutes.
Oh my God, you're not wrong. And also, you guys, just a little side note, my stupid phone with Zoom makes this like weird background blurry thing and I can't turn it off. And now the light is coming into the studio. So I apologize. I look like a phantom while I'm talking to Kelly and I'm sure it's very distracting. So I do apologize in advance, but oh my God, it's distracting me. It's driving me crazy.
So how do you set this up? There is an ability where family members can sell you houses using what's called a gift of equity. And it is the single greatest mortgage tool of all time if you are buying or selling to a family member. And what it is say a house's value is $350,000. But you want to sell it to your son, daughter, niece, something for $250,000. You're right. The bank is going to be like, you can't just undervalue a house.
Right.
Okay. So what you do is you actually sell it to them for a sale price of $350,000, and then you gift them $100,000 in equity, and this is part of the mortgage transaction.
Okay.
Now, where this is great for everybody is that the buyer of that house actually uses that equity as their down payment and their closing costs. So they can get into the house for $0 out of their own pocket.
Okay.
It is essentially a legal way to transfer without having to go through like gifting of the property and all of that sort of stuff. Now, there is some gift implications for the gifter on taxes. And so they always have to talk to their tax account and their CPA to make sure that they're falling within those limits. But most gift limits are incredibly high, and very few people actually ever meet them in their lifetime. You have a lifetime gifting limit for taxes. But that is the way to do it. And the saddest thing is, so I love that you were talking about this. I specialize in family housing and family sale purchases.
Okay.
It's a little niche market of mine. I do, and part of it is because I live in a town where it's very common that people buy or sell from Perry's. There's a lot of people who've lived here for many generations. And so I, again, rabbit holed myself into being an expert on this quite a few years ago. And now I tend to do 5 to 15 transactions a year that are set up like this.
Okay.
And the trick with doing is very few lenders actually understand the rules regarding these transactions. And so we get a lot of people just like your friend who are kind of just told, oh no, you can't do it that way. Or they'll try to get people to like, oh, I'm buying my house from mom, but they said I need to put 5% down, but I don't have 5% down. And so my parents are going to give me 5% in cash. And I'm like, why are they giving you dollars? It's already built into your house. Like it's already there. Nobody needs to hand any money over to anybody. And I will completely restructure these transactions in a way that makes sense. When you do it this way, it's completely legal. It fits mortgage guidelines. Again, it's a benefit to all the parties, and now you've cleanly transferred it. This is also good in the sense of we do have a lot of people now who are doing title transfers instead of actually purchasing property, and that's actually a lot messier and not great for anybody. When you do it through a purchase, you are legally handing the property over. Title is being changed. The mortgage is changing hands, which is often the most important part. The parent is getting paid, which they're normally looking for, right? Something. They need to either pay off another mortgage or make sure they have bills. And then everything is neat and tidy, and you know exactly who the owner of the property is.
Okay.
That's the way to do it. Love me some gift of equity.
Well, okay. So I've got two more questions as we reach the end here. My parents refinanced over twice, I think, on our family home. Now that I've been in my place for 3 years, now I'm starting to get the letters. Oh, you've got $50,000 in equity. Now is the perfect time to talk about refinancing. And I said to my mom, I said, you guys have refinanced before. Not that I'm hard up, not that I'm in a situation where I need a check or a leg up or anything like that. I said, but should I consider refinancing because I'm being told that I've got equity? She goes, if they're messaging you, it's because it's going to benefit them, not you. So what are the situations in which people would seek to refinance their home?
So I will tell you there are three main times that you're going to refinance a home. Number one is for what's called a rate term refinance. And that's truthfully I'll use some examples for right now. There were people who locked a year ago and they locked at an 8.125% interest rate.
Ooh, that's high.
Rates now, they are very high. Rates now are under 7%. That has a potential savings of a few $100s a month, depending on your mortgage.
Okay.
That 100%, that's a refi. That's a refi all day long. You should refinance that mortgage. Because if you were to figure out because it does cost money to do a refinance, and a lot of people miss that, and a lot of banks are really sketchy. Like, it's not going to cost you anything out of pocket.
Yeah, sure.
Oh, because we wrapped it into your new mortgage. You're right. It's not out of pocket, but it's going to cost you.
Right.
So you have to make sure that there's a net tangible benefit for you, that in the end, this is all going to make sense. And if you save $238 a month over 360 payments, that's a lot of money. That can very much make sense. So number one, a rate drop is the number one reason why people refinance a mortgage, and can be very sensible. But you're right. You're going to get a lot of stuff in the mail, and people are going to oh, you should refi. And you're like, I have a 6 and it's a 6.875.
Right.
Does that make sense? They'll tell you it does, but it doesn't.
Right. 100%.
Number two is the cash out refinance. So a cash out refinance is where, say your house is worth $300,000, you owe $100,000, there's $200,000 in the middle. How do you get to that money? That's either through a cash out refinance or a home equity line of credit. And both of these are loans that are tapping into that money in the middle. A cash out refi is where you are taking out a loan for your old mortgage plus what you want on top, and you're taking one big mortgage, right? So from you want $100,000, you got your $100,000 old mortgage, $100,000 on top of it. I now have a new mortgage for $200,000 that's amortized over 360 months or 30 years. So my payment is on the low side, but I get $100,000 in cash at the end of it. Why do you want to do that? That cash, theoretically, unless you're very hard up, should not be for your everyday living expenses. Okay. Because you're essentially paying interest on that money for 30 years. So if you cannot meet your monthly obligations, there's other things that you need to work on before you take it out of your house, unless it's an emergency.
Right.
What can it be used for, though? Home improvement is a great use of your equity, because you're going to put the money back into the house, which then raises the value of the house and theoretically gains you more equity. Okay. So home improvement is a great option. Debt consolidation is a very common one. Now, debt consolidation is a bit controversial. It depends on your situation. And what do we mean by debt consolidation? So say the interest rate today is a 6.5, and you have 3 credit cards that are maxed out for $10,000 a piece, so $30,000. The interest rate on those is 22%, because that's often around what credit card is. Maybe you have a car loan with a $700 a month payment, and that interest rate's at 9%. And maybe you have a personal line of credit out, and that's got an interest rate of 8%. It would be cheaper on a month basis for you to take all of that debt, put it together, take out a cash out refinance, pay all of that back, and then just have one monthly payment with the lower 6.5% interest rate. that can be life-changing for people.
Absolutely.
Because most people, again, if we go back to the beginning of the conversation, they're living their life on a monthly basis, right? What am I paying a month? And sometimes our monthly debt obligation just becomes too high. So those are some of my favorite transactions to do because it can be immediate, really relieving for people.
But again, in that situation, in the long term, are you still going to be paying more?
So you are not going to be paying more versus those other transactions. Okay. So if you have a credit card that is maxed out and you are only making the monthly payment on it, you are never actually, the minimum monthly, you're never actually paying that off.
Right.
But what I was going to say, it was exactly that this is not a solution though to poor financial management. Okay. And that is what a lot of people try to use it for.
Right.
And I have had some clients that we've done debt consolidation for, we've come up with a plan, and then they come back to me 2 years later and want to do it again because we have found ourselves in the same position. And that's where it gets really hard. If you are in a situation where you are racking debt and there was no emergency, okay, you have kind of bad financial habits and you have to break those before this really solves anything. Now, the flip side is I've had people that had, I had a client a few years ago that had a preemie baby that wasn't anticipated. She ended up out of work for 5 months while she was on bed rest, and the baby was born. The baby had to stay in the NICU for 3 months. She was out of work, credit cards piled up, everything got a little bit crazy. Everybody was better. 8 months later, mom was back at work, dad was working, we were making money. They were fine, but we now have this backlog of debt that they just could not get ahead of, right?
Yeah.
Like it's just there, it's looming. We get a cash out refi, we paid it off, and they're fine now. Life is back on track. That's really a great use of this. But if you are just kind of always living that little bit above your means and it's adding up, the cash out refi is not necessarily going to help that. But that is a reason to refi if it makes sense for you.
Well, and I also look at it, in my opinion, at least, and I don't know how you feel about this, but I look at that as like, it would be one thing if I know for a fact this is going to be my forever home. I'm never going anywhere. I don't have to worry about, long term, like I'll just keep paying within my means and that's fine. Maybe, do one refi, like you said, to like, okay, let's pay off the rest of my debts. Let's get those down. I don't mind because I'm playing the long game anyway. I know I'm going to be here for the next 30 years. It's not really going to be that big of a detriment to my bottom line. But like you said, I think a lot of people do. They see it as and that's how it's marketed. That's all the letters 100%. I've been. That's all the
and
letters.
That's how the lender wants you to do it.
Yeah.
They don't want you to think about the rest of it. They want you to.
They treat it as a get out of jail free card. Yeah, and I said they worded it exactly that way. Oh, you've got $50,000 in equity now. Wouldn't it be great for? Do you have?
Money.
Do you have a car payment? Do you have this? Will it make that much easier? Da 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 da. So thank you for breaking that down. And like I said, I kept saying that to my mother. I was like, the fact that they're hounding me, and she's like, yeah, clearly that means they want you for a reason. No one just comes to you out of the blue, like, I'm going to help you out, now the other thing I want to talk, because we talked about selling to family and that kind of thing. When someone passes away and they leave their home to a family member, what have you. Again, I've also heard it's tricky there with taxes and it's not just a simple, I'm handing you this house. There's a lot of crap that comes into it that most people don't know and don't realize, but there are things that they can do to set their family members up for success. So and please, I know you'll correct me, but from what I've seen, you want to put it into like a trust or an estate rather than just here's my house. I'm not.
So all of those actually work well. You can just give people your house. They can inherit your house. You can put it into trust. You can put it in estates. The biggest thing is having it written out with an attorney in some sort of a will or a trust situation. So when people get themselves into trouble with inheriting property, it's generally for 3 reasons. It's number one, that the person who passed did not have it set up at all or correctly. If you do not have a will, okay, every single person, and I fight with people every single day about this, okay, everybody needs an estate planner. You need a will. I don't care if you're single. I don't care if you have no kids. I don't care whatever. You need to have a will. And here's the reason. You do it for 2 reasons. You do it, number one, to protect the people that you love. Okay. That's why we have a will. Because even if you're single and you have no kids, somebody is going to inherit your problems.
Right. 100%. Yes. Have to deal with your shit. Yeah.
And your assets. And you want to have them legally protected, whether it is your parents, your spouse, your siblings, your children. There has to be a plan written, or else you're leaving them a big steaming pile of shit. Okay. Like that they now have to deal with. And that's not fun for anybody.
No.
So that's item number one. Item number two is, depending on your net wealth and your situation, what that plan looks like could be very different. I wouldn't necessarily recommend a trust for somebody who their only real asset is a small home. Okay. That probably doesn't make sense. You're just going to will it to somebody with some explicit instructions on what they're going to do with it. But if you're someone that does, maybe you have 2 or 3 properties, maybe you have IRAs, maybe you have a big retirement account, like stuff is coming, you really need a great estate planner who is going to help you set this up in a way that is going to transfer these to the people in the cleanest way possible. Because the other piece to it is the person who is receiving that has to be financially prepared to receive it. And houses are really tricky, right? It's people like, I have a house and it's worth money. You should want it. But it doesn't always work as simply as that. Maybe the house is not where you want to live. Maybe you don't want to live in the house. Maybe you cannot qualify for a mortgage on that house. They just get to keep your mortgage. Okay. They have to go qualify for a mortgage themselves. Maybe the house is paid off and that's great, but they need a mortgage to recoup funds to actually live in the house. Maybe the house needs work. So really there needs to be estate planning involved. So anybody, if you have parents, grandparents, aunt and uncles, somebody who may be giving you a piece of property, it really would behoove everybody to sit with an attorney and come up with a plan that works for everyone and make sure that everybody gets the benefits of it. And they get why it might work or who it might not work for, because financially, that they can't pay a mortgage on, they can't qualify for a mortgage on, and now they had this expectation that they were getting this thing worth something, and now it's become a really big heartache and headache for them. And we have to be like, okay, well, I guess we got to sell it, and this is a family property, I don't want to sell it. It can be really traumatizing for people, especially they're also dealing with grief of the person who's passed away.
Right.
The other reason for it is there are tax implications to all of these types of transactions. And I would tell you, in my opinion, right, mortgages are one of the biggest mysteries, financial mysteries in our lives. Second, after taxes, right? We are right after taxes. There's nobody, and I have this joke about taxes, is there's nothing else that we do in our lives where there is this big, mean government entity that's like, guess how much money you owe me. Take a guess. I want you to put it on this paper. And then when you're wrong, you go to jail.
Yeah.
Okay.
Right.
They knew exactly what we owe them. Just tell me. Just
oh my yes. Oh my God. It drives me crazy. Right.
It's ridiculous. But taxes, you get taxed on everything. And so understanding the financial implications to what you're doing is very, very important. So it can be complicated. The best route really depends on your whole scenario. And I will tell you, financial professionals are worth their weight in gold, whether that is a financial advisor, a mortgage person, an estate planning attorney, a tax preparer, a CPA, whoever it might be. Pay the people to tell you what you need to know.
Yeah.
Because it's very hard to figure out on your own.
Well, and again, like you said, being the Google generation, like I said, I'm learning these things through these vlogs, right? Through these websites where they're answering questions. But even they specify, they say, listen, I don't know what state you're from. Depending on what state you're in, you've got this law, you've got that, because people ask questions about, I'm thinking about getting a divorce, but this is the situation with our finances. I myself learned because again, I am a childless cat lady. So all of my stuff is going to family members or to my best friend's kids, and I learned, and again, this is not real estate related, but I think it's important information that a lot of people I don't believe know. And I don't know if it's specific to Connecticut, but your checking and your savings accounts with your bank, even if you have, people in your will that are delegated to your funds, if their name is not attached somewhere, especially to certainly to your savings account, the bank is going to say, this is our money. You can't have this. You can't access it. Like, I don't care that you're next of kin. I don't care that they've written you into the will, that you're a dependent, what have you. We don't have that piece of paper that says you can access these funds. So I've gone ahead and I've done that with every single one of my accounts. I've attached my mother and my sister to them so that, should anything happen, they can go to the bank and say, yep, give me her money. But I don't think many people know this. And again, you're like you said, you're grieving. You're so overwhelmed. There's so many different things. Like you said, I've now left you a pile of my stuff that you don't need or want or know what to do with. And then on top of it, I also have money and assets, and how do you access those? And how do you, it's all so very overwhelming if you don't know, again, state to state, what the rules are and what you've got to do, and setting these things, putting these things in place. Joanne, I hope you're listening to this conversation. I love you dearly, but my God, girl, get your shit together. I have this conversation constantly with my mother, and so I appreciate you coming on and having this conversation with us, because like you said, it is complicated, but once you understand it, it makes a lot of sense. It's definitely navigable once you get past that sense of like, oh my God, I don't know what I'm doing, and you just get hung up on the numbers.
Yeah, and finding professionals that you trust. The other thing that I think is important, and this is not mortgage related, this is kind of what we've been talking about, is we also live in a very digital age, and I think about that all the time. Is that when our grandparents died 30 years ago, you would go into grandpa's office and you'd rifle through his paperwork and you'd find all the bank accounts at the local bank, and you would go there and you knew what they were. If I was to drop dead tomorrow, I have no statement for any of my accounts.
Right. And
how would somebody even find it?
Right. And I've said that to my mom too. I said, if you die tomorrow, I don't know what bank you use. I don't know what credit card companies you're talking with. I don't know what kind of loans you have out there, what your debt looks like. I would have no idea who to contact. I would just go through your wallet and get the 800 numbers off the back of your credit cards. Right. Because how do I, and I myself have, like a just in case folder in my email. I have a list of, passwords, all that kind of thing. But at the same time, I haven't told anybody where they are. So it's not like I'm doing anybody any favors either if I get hit by a bus today.
And everybody really should have, and I'm going to use the term executor of their estate, right? Yeah. Once you write a will, you have an executor. You pick somebody. So everybody should write a will, okay, number one. Yep. And number two, when you have that executor, you should be having a conversation with them and giving them a folder of information, your oh shit, just in case folder of, here's the deal, my friend, never log into my Facebook. There's things on there you don't want to see, okay? Don't log into my email, right? I don't need anyone to know how often I refill my Starbucks card. That's unnecessary. But have it, put it away somewhere. And if shit ever does hit the fan, these people do have access to all of your things. And I say that doubly so if you are a parent of any kind, either a pet parent or a people parent, is like, do you have a plan for your pet? Same thing, like, who is their vet? Where do they go? What does that information look like? Like, you really do need because we live in such a digital age where there is not a paper trail of all the things that we're doing. Will the government eventually figure out where all your bank accounts are? Yeah, they will. Okay. It could take them years.
And also they're not interested in helping you. They're not. They got bigger fish to fry. They don't care that Meemaw passed away and now you're trying to figure out, what she's got out. So, and I'll leave you with this one final thing. One of my best friends, her estranged uncle was out in California. He had passed away, had no children, no next of kin. Her mother had passed, so his sister's gone. A company reached out to her and her sister out of the blue, said, "Hey, your uncle's got some accounts, has some money. This is what I didn't even know this was a thing. They're like, this is what we do as a company. We find people who have passed that have just money just lying around, and we try to access it for their remaining family members for a fee, of course.
For a percentage of that job.
Exactly. And of course, and so my best friend said, okay, fine. They filled out all the appropriate paperwork, and they did. They Googled this company. It is a legitimate company. It's not some Nigerian prince with an AOL account. But at no point were they ever given an amount, were they ever given a total during this whole process. It's just, you've got some mystery funds lying around. We'll take care of it for you. We'll clean it up for you. So listen, there are companies out there that'll do the work for you if that's what you want to do. But now, mind you, the man passed probably 5 years ago at this point, and they're just getting around to it. So, you know, if you don't want to put anything in place and you think, they'll figure it out at one point, somehow the money will get to them some way. Okay, that's great. But I'm pretty sure your family members aren't going to appreciate that line of thinking. So just a lot to throw out there and give people some things to think about as they're trying to plan their future, think long term. And people, you should be thinking long term. Like I said, money wise, I think monthly to monthly. But at the end of the day, like, I do hope that I'm in my townhouse for quite some time. Like I said, I was eyeballing a newer property in the area. Yes. But again, it's renting. I'm not renting. So I'm fine where I'm at. I'm staying where I'm at. But especially because things are constantly changing. And like you said, interest rates up and down, prices are always going to go up, in my opinion. I don't think nothing's ever coming down. Nothing's ever going to be affordable ever again. But it's how you manage it and how you navigate your day-to-day that can make these kinds of things possible for you. So Kelly, I do appreciate you sitting down and talking with us and answering my dumb questions. Because again, even though I am a homeowner, I have no idea what I'm doing, from one day to the next. So you guys, I hope you got some beneficial information out of this. If you are in the Connecticut area and you need some information, you want to reach out to Kelly, please feel free to message me and I will get you in touch with her. But you guys, this was Try Not to Curse. I'm Elizabeth Marvel, and Kelly, again, thank you so much for joining us.
Thank you for having me.
We'll talk to you next time.